Look, the better than expected inflation reports now have people thinking core PCE is going to be like a tenth at the end of the month. It's extraordinary. And stocks have come roaring back to all-time highs. But my next guest says most people are still too overweight on equities. Let's bring in Rich Weiss. He's the chief investment officer of multi-asset strategies at American Century Investments, which has a cool $272 billion in assets under management. Rich, it's great to have you here. And you're still pretty cautious about things.
Yeah, we are cautious. We think we're being prudent here. To the comments just a minute ago, I don't think it's way too early to declare that we've won the war on inflation here, right? And granted, we've had a couple of decent prints recently, but and forgive me for contradicting the president here, but they're not eating the dogs, they're not eating the cats, and they're not eating the tariffs. And the New York Fed recently came out with a survey showing that most companies are passing through all or most of the tariff increases. We just haven't seen it yet. So I think through the summer, we're going to see more inflation, and that's problematic for a number of reasons. Then you add to that the ancillary problem of our debt right now. The U.S. debt to GDP is somewhere around 4%, give or take, depending on what database you're looking at. And that puts us in the neighborhood of countries like what was it? Brazil, Kenya, Angola, and believe it or not, Ukraine. Those are a handful that have slightly more or larger debt problems than we do. So I think we have a host of issues to deal with here.
And this was not done intentionally, Rich, but I'm going to bring in Rick here, who, if he just heard your comments, I'm sure has some reaction. But it's to give us the results of the 30-year bond auction as well. Given what you just said, let's see if investors are worried we're the next, Uganda. Rick Santelli, how'd it go?
Well, if you were to look up perfect auction in the dictionary, they would probably say, look at today's 30-year bond auction. $22 billion reopened 30, so 29-year, 11-month security, adding to a security's coupon is already open. And the yield at this Dutch auction, 4.844. The when issued market was about a basis point and a half higher at 4.859. So lower yield, higher price. Government was a seller. This was a really, really good auction. The bid to cover, basically 10 auction average. Indirects and directs combined were very solid. Maybe the most telling metric was 11.4% went to dealers. That's the best since November. So really, really good auction. You can see yields moving down a bit. $119 billion in coupon supply now out the door. And the 30-year maturity, as many have talked about, basically it's the darling of the pension and insurance industry, so it has a more limited audience. So this was really a very good auction. And in terms of our guests there, I don't know, you're comparing us to the countries you just compared us to, seriously? Come on.
Can I, Rich Weiss, if you'll allow me to make this an impromptu debate, and why not, unless you object, do you want to kind of talk to Rick directly about this? Because I think this doesn't capture the minds, the split sort of sentiment or view that I myself have. Some days I wake up and I think this is fiscal calamity, and other days I go, I don't even know if it matters.
Well, certainly.
Well, wait a minute. Are we in the fiscal calamity business, or are we in the follow the market business?
Go ahead, Rich.
Certainly, I'm not saying we're in the same financial situation as Ukraine right now. But the fact is, at 4%, this is a problem we have to deal with. The current skinny bill, as it was called, still needs to go on Ozempic to some degree, as we all know, because we cannot continue to add to the deficit, even though we have the luxury of being the world's reserve currency. The fact is that will become inflationary as we continue to add to the debt and the deficit. I don't think you can argue against that, Rick.